Robinhood stock has been one of the most closely watched names in the market over the past several weeks, and as we head into a new trading week, investors are asking the same question: what comes next? The stock has ridden a wave of enthusiasm thanks to its confirmed inclusion in the S&P 500 index, and it's been further boosted by the Federal Reserve's decision to cut rates by 0.25% while hinting that as much as 3 cuts could be on the table by year's end. At the same time, Robinhood has been unveiling new features, pursuing product diversification, and making moves into areas like wealth management, banking, and even venture investing. All of these developments make it one of the most dynamic names to follow right now. But as we head into the new week, what exactly should investors keep an eye on? The first point of focus is the ongoing flow of capital tied to Robinhood's S&P 500 inclusion. This is one of the biggest catalysts the company has ever had, because it's not simply a headline or a sentiment shift. It's a structural change that guarantees demand for the stock from every fund that tracks or benchmarks against the S&P 500. Those passive inflows are not instantaneous, they happen over the days and weeks leading up to the rebalance date. That means Robinhood still has a steady floor of demand underneath its share price as index funds gradually take positions. The exact timing and scale of these flows is hard to predict, but the important point is that demand is still out there, waiting to settle. For retail traders and short-term investors, that makes the next week critical to watch. Will inflows be strong enough to push the stock toward new highs, or will profit-taking offset some of that pressure? The second thing to watch is how Robinhood trades around the psychological $120 level. This has become the new battleground in recent sessions. Breaking decisively above that mark could open the door for a run toward the 130 range, where some of the most bullish analyst targets currently sit. On the other hand, failing to hold 120 could trigger consolidation or even a modest pullback as traders lock in profits. For context, Robinhood has already rallied significantly from where it was just a few months ago, so consolidation wouldn't be surprising. But whether the stock spends the week grinding higher, pausing for breath, or retracing a bit, the key is how it behaves relative to this 120 line in the sand. The third point to keep in mind is macro. The Federal Reserve's recent decision to cut rates by 25 basis points was broadly positive for growth and fintech names. Robinhood fits squarely into that category, and while lower rates may reduce some of the interest income it earns on customer balances, the bigger picture is that easier monetary policy tends to stimulate risk-taking, trading activity, and enthusiasm in markets like crypto. That's where Robinhood thrives. The Fed also signaled more cuts could be coming, which adds further optimism to that story. So next week, investors should watch how the broader market digests this Fed pivot. If equities continue higher, if the NASDAQ shows strength, and if crypto pushes up, Robinhood could continue to benefit from that macro tide. Fourth, it's worth watching crypto markets closely. Bitcoin and Ethereum have historically been powerful tailwinds or headwinds for Robinhood's revenue because transaction volumes rise and fall with crypto volatility. If crypto prices remain stable or trend higher, Robinhood's volumes are likely to benefit. But if there's a sharp drop, it could weigh on sentiment and revenue expectations. The next week could be especially interesting here, as crypto has been relatively quiet in recent days, and many traders expect a breakout move in one direction or the other. Another important thing to track is analyst commentary. Robinhood's inclusion in the S&P 500 has already sparked some analysts to revisit their price targets, with bullish estimates stretching up toward $130. The consensus, though, is still in the mid-90s, which means the stock is trading well above what many Wall Street firms officially forecast. If analysts begin revising their targets upward, that could provide a second wave of support, giving institutions more confidence to add or hold positions. Conversely, if analysts caution that the stock is overheated, it could put a lid on near-term upside. Either way, their voices will matter, and next week may bring a new round of research updates. In addition to analyst coverage, investors should pay attention to Robinhood's product roadmap. Recently, the company announced Robinhood Ventures Fund I, a closed-end venture capital vehicle that gives retail investors exposure to private companies, something usually reserved for accredited investors. This move is a sign that Robinhood is serious about expanding beyond simple trading and into broader wealth and investment services. On top of that, the company has been developing new features like Robinhood Social, AI-powered trading indicators, and futures contracts, all aimed at appealing to both retail and more sophisticated traders. And then there's the Bitstamp acquisition, which could extend Robinhood's reach into international crypto markets. These initiatives may not dominate headlines next week, but they form the backdrop against which investors will judge the company's long-term credibility. Any updates, announcements, or even subtle hints about progress on these fronts could become catalysts. Technical momentum is also an area to keep a close eye on. Robinhood has been trading above its key moving averages, and volume has been robust. That suggests institutional participation, not just retail excitement. If volume remains strong as the stock tests higher levels, it would confirm the strength of the trend. If volume drops off, though, it might suggest that the rally is losing steam. Traders who rely on technical signals will be closely watching moving averages, relative strength, and volume patterns to gauge whether the uptrend remains intact. Another layer to consider is sentiment more broadly. Robinhood has long been a lightning rod for controversy, and not everyone believes the company deserves its current valuation. With a forward price-to-earnings ratio above 40, expectations are already high. Bears will argue that the stock is overvalued, vulnerable to a pullback if anything goes wrong, and overly reliant on crypto revenues. Bulls counter that the company is transforming into a diversified fintech platform with multiple growth drivers and a massive user base. Next week will provide more clues about which side is gaining the upper hand. So what does all of this mean for the week ahead? In short, investors should focus on 5 things. First, the scale and timing of index-related inflows as funds continue to position for Robinhood's inclusion. Second, the stock's ability to hold or break above the $120 level. Third, the macro environment, especially how markets digest the Fed's dovish pivot. Fourth, crypto market trends and their impact on transaction volumes. And fifth, any analyst updates or product roadmap developments that add fuel to the narrative. Pulling back, the bigger picture remains cautiously bullish. Robinhood has legitimacy now with its S&P 500 inclusion. It has momentum from both passive inflows and broader growth sentiment. It has strong fundamentals, with revenue growing 45% year-over-year and millions of active funded accounts. And it has a roadmap filled with expansion opportunities, from crypto to banking to venture investing. The risks are real: valuation, crypto volatility, and regulation are not to be ignored. But in the balance of risk and reward, the setup remains compelling. As we move into the weekend and prepare for the week ahead, Robinhood finds itself at a critical juncture. It has the chance to consolidate its gains and prove it belongs at these levels, or it could face tests that shake investor confidence. The next week will tell us a lot about where the balance of power lies. Will passive inflows and macro tailwinds push it higher, or will the weight of valuation and profit-taking pull it back? That tension is what makes Robinhood one of the most fascinating stocks to watch right now. So as the market gears up for a new week, the cautious bullish view is this: Robinhood has momentum, it has inflows, and it has legitimacy. The stock may not climb in a straight line, but the trajectory is still pointing higher. Investors should watch the key levels, track the flows, and keep an eye on both crypto and analyst sentiment. The story isn't finished. In fact, it's just beginning a new chapter. And next week may give us the first few lines of how that chapter will read.